market news now, Asian stocks started the week on a cautious note while awaiting a host of U.S. Federal Reserve officials to speak this week. A report on Friday showed U.S. consumer sentiment slumped to a 6-month low in May, and long-term inflation expectations jumped to the highest since 2011, boosting the U.S. dollar and the Treasury yields. Locally, pharmacy group Dis-Chem co-founder and CEO Ivan Saltzman will step down at the end of June 2023, and current CFO Rui Moraes will take the helm. The company, valued at $20.4 billion on the JSE, said that Saltzman, who started the company well in the late 70s, would stay on as executive director of the board and remain an executive member of the executive team as he focuses on growing Dis-Chem's retail space. The company also released their trading update. We'll also be chatting in with the Vodacom CEO, Shamil Jasoob, as we talk about the company's earnings. We did see their net profit down, and it was a range of factors, and some of them the macroeconomic challenges, as well as the kind of money that they had to spend in order to keep their network towers up and running. So we will be talking with Shamil about that. But to get some perspective on the markets, we are joined by Gary Boyson, who is from Rand Swiss. Gary, thank you so much for your time. As we start off the conversation, let's look at some of the concerns and issues that the market is having right now, having to grapple with. How are you describing that sentiment?
Well, the local market today is, there's not too much in it. So we've still got the financials, which have been under a little bit of pressure recently. And I think that's largely because of the challenges that we've seen around the local currency. When you've got the local currency depreciating and the South African banks are kind of come directly under fire. So we've got the financial 15 down around 0.4%. We're seeing a little bit of a recovery in the resources and the industrials. The industrials are leading the upside, but no big moves one way or the other. Even the corporate news that we've had out hasn't really shaken the market. I suppose the big kind of overall price move that we've seen, it has been a recovery in the South African rand. We've recovered from those very, very weak levels to the US dollar at 1951 on Friday, all the way back to around 1903 at the moment. So I think a little bit of nerves settling down between what they're calling Lady Russiagate.
All right. So let's talk about some company news. There's quite a bit, I suppose, that happened on SENS. We had the announcement coming out of Dis-Chem, the trading update, but we also had results from Vodacom. Which company news caught your attention?
Well, I think the idea that Ivan Saltzman is stepping down at Dis-Chem was certainly interesting. He's been there for a long time. He, together with his wife, founded the company in 1978. And while he is going to still maintain, some operational activity, specifically looking at expanding their store footprint, it's been a long run at Dis-Chem, and to step down and hand over the reins in an orderly fashion, I think is quite exciting. And we've got Dis-Chem up around 2.5% on the news, which means that the market is liking this, which I think is encouraging for Dis-Chem shareholders. Looking at Vodacom's numbers, of course, highlighting the issues that we know in South Africa already, challenges around the power crisis. I mean, the group's spending around 300 million already this year in additional costs. Since 2020, they've spent around 4 billion on backup equipment. So the energy crisis really a challenge. But the idea that they spend 13 to 14.5% of their market cap every year just in making sure their network is strong and is expanding the rollout of the 5G, etc., means that even with load shedding, their network quality has been improving. From a gross revenue point of view, up 16%. It looked fairly decent. Net profit is flat, but of course, with the headwinds that it's facing in terms of high interest rates and the inflation as well. I think it's a decent set of numbers. No big moves on the in the actual stock price on the day, but I thought a fairly decent set of numbers.
Right. So let's talk about the U.S. markets for a bit. I mean, I've been paying attention to what is happening with the regional banks. Is the worst over, or are you expecting the shoe to drop at some point? What are you paying attention to?
Well, I think if you look at mainstream media headlines, there's no question that it's taken a little bit of a backseat over the last week or so, but there are definitely still issues within the U.S. banking system, specifically in the regional banks. So, the fundamental drivers of what we've seen, with the likes of First Republic, etc., haven't really changed. U.S. interest rates are still very high. At the same time, you've got a bank like PacWest, which looks like the next one. It's still trading, still trading down. We're seeing their share price off around 90%. They've got about 5.1 billion in that's US dollars in uninsured deposits. Behind that, you've also got Western Alliance Bank. That's also still down around 60%. There's still real concerns about whether there's going to have to be some sort of deal made around those banks, and that is significant. I mean, if you look at something like Western Alliance Banks before the drop, this is about a $10 billion market cap business. That puts it in the same region from a market cap point of view as the likes of Standard Bank, which is the biggest bank by assets in Africa. So while it might be a regional bank in the US, these are still very large institutions that have significant problems within them. So yes, it seems to be out of the news cycle for now, but it's definitely something that we're keeping a close eye on.
In a market like this, if there is a buying opportunity, does it make sense to be plowing into the best performers?
I suppose that's a philosophical debate on how you invest. Are you a value versus a growth investor? Do you believe in the momentum in stock prices, etc.? But I think maybe from the viewer's point of view, the best thing is you need to take every investment decision on a case-by-case basis. So if I look over the last year, the number one stock in terms of upside in the top 40 has been Naspers, which is up roughly 100%, so doubled over the last year. That coming off a very low base, and from our point of view, I think there's still significant value to be realized in China now that it's starting to wind back the aggressive lockdowns, and now that we're seeing growth returning to that market, at least ending the zero COVID policy. So yes, I think there's still an opportunity, even though it has risen aggressively. But the next two stocks are Anglo Gold and Gold Fields, up 84% and 71%. Now, if we see the world settling and returning to growth, those are incredible runs for gold miners, which are traditionally volatile and more of trading stocks. So maybe be a little bit more concerned about chasing profits there.
All right, Gary, thank you so much for your time. That is Gary Boyson, who is from Moran Swiss, giving us his perspective on the markets. And of course, giving us an update in terms of, I suppose in an environment like this, how do you tend to go with your investment strategy? Are you value versus growth? And that all remains to be seen. However, let's move on to company earnings now. Mobile carrier Vodacom reported a 6.4% drop in full-year profit due to a local power crisis and other operational activities. The company, valued at 233.4 billion rand on the JSE, said in its results for the year to end March that net profit increased 2.1% year on year, while its full year dividend was slashed compared to last year. However, we will come back to Shamil Jusub. We'll have a conversation with him after this short break. As mentioned, mobile carrier Vodacom reported a 6.4% drop in full-year profit due to a local power crisis and other operational activities. The company, valued at 233.4 billion rand on the JSE, said in its results for the year to end March that net profit increased 2.1% year on year, while its full-year dividend is down more than a fifth, in line with Vodacom's new dividend policy of paying out at least 75% of headline earnings. For more, we are joined by CEO Shamil Jusub. Shamil, thank you so much for your time. Let's look back at the second half that was for Vodacom, given the macroeconomic conditions we find ourselves in.
Yeah, I think it was a very strong second half for us, and where we saw an acceleration of service revenue. So I think we were quite pleased with the second half performance, both in South Africa and in the international operations. So a very strong second half, which has of course given rise to the overall growth both in revenue and in EBITDA.
When we look at spending, especially when it comes to the effects or mitigating the effects of load shedding, we've seen quite a number of companies, especially JSE-listed companies, talk about the kind of spend that they're looking at. Are you expecting that kind of capex or the investment into that to increase, or are you looking at some initiatives that will be able to mitigate some of the costs that you're incurring for to keep your towers up and the network running?
I think it's a combination of factors. I think we've spent over 4 billion in the last 4 years in terms of batteries and generators and so on. And this last year we spent 300 million just on fuel and generator costs and managing logistics. So Where we see it going forward, honestly, depends very much on the level of load shedding. We're kind of prepared for where we are, but if the situation worsens, then of course, then of course there's more investment that needs to be made into the effects of load shedding. On the positive side, we're trying to help as much as we can with the virtual wheeling project and how that can help Eskom by us contributing power to the grid. And of course, we think if the model is workable, but if they adopted it, it can be scaled up with other corporates, especially our industry, adopting the same.
I'm going to put you on the spot here in terms of a worst-case scenario situation. We've seen a lot of the insurance companies, Sasria for a little bit, touched on what it would mean if we had total grid failure. Have there been conversations within Vodacom about what that would mean for the network provider?
Yeah, of course, if there was a total grid failure, I think the whole country will be in darkness. So I think that's just the reality. Powers, networks run on power. To just give you a scale of the issue, think about your own situation at home and times it by 15,000, that's our problem. And for the industry, times it by 20,000. So, I think we do run networks on generators and fuel and so on. So it is possible to do, but then you'd have to make a total transition from where you are into running off generator power. And that will be quite disastrous for the industry.
What are you seeing in terms of demand or the appetite towards your super app VodaPay?
So we're seeing, it's been a really good year, to be honest. 5.7 million downloads, 3.3 million active users. We're seeing the use cases grow, and it's been very encouraging to see people both buying telco and non-telco products through the super app. And we now have launched cash in, cash out, so we intend of scaling more of the use cases this coming year.
The last time we had a conversation, we spoke a little bit about some of the cost-saving initiatives that you would be focusing on. Are you able to give us a little bit of color in terms of those initiatives and in which side of the business they were focused on?
You saw it coming through in South Africa's second half EBITDA growth, right, which was 5.8% versus the first half, which was minus 1.8%. So I think, the strong initiatives, both from a revenue perspective, but also from a cost perspective, was clearly evident. So what is it that we did? Well, I think firstly, we have a very robust procurement part of how we negotiate, how we try and build once and replicate. So we're trying to do more where we share costs as opposed to doing everything ourselves. So an example of that is we've set up a network operations center out of Cape Town, where effectively we manage our operations across all our different markets from one center. So that's, those are some of the type of synergies, but even in your IT investments and so on, trying to make sure that we can build more platforms that are replicable. And then, of course, using things like robotics process automation, big data analytics to plan the network, but also to take costs out in terms of process improvements and so on. And I think that, and then looking at every single area and looking how can we optimize, what can we do better. I think all of that is played out quite nicely into the year and helped us.
Shamil, always a pleasure having a conversation with you. That is the CEO of Vodacom, Shamil Jusub. Currently, that share price up 0.4%, trading at 112 Rand and 78 cents. Let's take a quick break. When we come back, we'll have a look at the Rand's performance.